Well, ho ho ho, what a week in the market. Just a week left until Christmas and no sign of the Santa rally. It's all a sea of red and not the good kind, just negative numbers all around us. Either way, plenty to talk about this week. In this episode, we'll run through all of the week's headlines, look at the IPOs of the week, check out some of the funniest memes from WallstreetBets, and as usual, tell you about all of the fails that have happened in the world of business and the stock market here in the UK and around the world. Climb on board, let's get straight into the headlines. Inflation, and more inflation has been the hottest topic this week, both here in the UK and over in the States, as the Fed chairman, Jerome Powell, decided that the money printer is going to have to be turned off. But don't worry, not straight away. In a meeting on Wednesday this week, the Fed confirmed that the tapering of asset purchases, which in normal speak just means the slowing down of the money printer, will now take place slightly faster than was initially agreed in November. Rather than $15 billion of reductions in purchases, the central bank is now looking to reduce to $30 billion, a twofold rise in their previously stated goals. This takes monthly purchases down faster than expected, so that no more new asset purchases will be made by early 2022. Indices reacted sharply to the announcement, with growth stocks taking a hammering, bringing value investors back into play, rubbing their smug hands together once again. So far this week, as of recording, the Nasdaq is down over 2.5%, although the S&P 500 is only down 0.9%, meaning that good old index funds save the day yet again. Over here in the UK, the Bank of England has finally made a move to increase interest rates as a step towards cutting record high inflation. With the retail price index hitting a record 7.1%, the central bank was forced to act, and has now raised its base rate of interest from the low of 0.1% to a whopping, wait for it, this is big, 0.25%. Huge. Most economists, as I reported last week, were not expecting the rise and had predicted the rate to remain at the same level. Just shows you how good they are at making predictions about the future. The FTSE 100 is hovering down slightly this week at minus 0.33%. Sticking with the UK, the Financial Conduct Authority, the watchdog in charge of regulating the financial markets, is looking to change current rules for listing on the London Stock Exchange. In a bid to attract new and innovative companies to float and trade on the exchange, the watchdog is making a couple of major amendments which will aim to put some lifeblood back in the old dog that we love so dearly. The two major changes are allowing dual class shares, which means that some shares carry less voting rights than others, common already in the tech sector, notably among people like Facebook and Google's Alphabet. And secondly, allowing a minimum number of shares to be reduced from 25% to 10% in order to get a successful flotation on the flagship London exchange. Watch this space, guys, the FTSE 100 is going to the moon. In what seems to be a week of corporate fines and clawbacks, HSBC has been caught with their trousers down and fined £63.9 million for multiple failings over the course of 8 years. The global bank was found by the Financial Conduct Authority for not spotting clear criminal activity from terrorists, cartels and money launderers who were apparently able to suddenly increase their spending habits by thousands of percent without anyone noticing. The catalogue of failings from 2010 to 2018 is embarrassing for HSBC because they were found in the same system known as CAMP that led to the record $1.9 billion fine in the US for 2012 for helping Mexican drug gangsters launder their money. I think some people say that banks are horrible organizations.
Rough, bad people.
Company insolvencies in England and Wales rose last month to their highest level since January 2019, surpassing pre-COVID levels for the first time, government data showed on Friday. The insolvency service registered 1,674 business involvement on November, up from 1,410 in October. This comprises mostly voluntary liquidations of businesses, but also companies falling into administration and compulsory liquidations. The volume of business closures dropped sharply last year, while many businesses were kept on life support by government COVID support programs. Court capacity was reduced and creditors faced restrictions on taking legal action until very recently, slowing the process of company dissolutions. And finally, for your headlines, let's head over to China, where Microsoft's Bing search engine, who apparently still even exists, I presume because it literally forces users and nags them to death to do so, just like that old paperclip in Microsoft Office. Remember him? Yeah. Bing's Chinese website had a notice saying that it was required by government agencies to suspend the autofill search suggestion feature. No other explanation was given as to why they had to do this. Some users began to report that they could no longer even open the website, although others still managed to get through. Hang on, let me just test something in Google to see how this auto typing stuff works. Is everything okay? Bing is the last search engine provider based outside of China that is still active after Google pulled their services in 2010 after refusing to comply with the demands of the Chinese state. The Redmond headquartered giant refused to comment on the story, according to reporting by the Wall Street Journal. Now let's head over to our favourite weekly section, starting with fails of the week. Just when you think it couldn't get any worse, fails of the week. This week's fail is an expensive lesson that reminds us all not to be naughty boys while at work. McDonald's have clawed back a $105 million settlement package that they have awarded to former UK boss Steve Easterbrook. The ex-UK CEO was sacked in 2009 for alleged working relationships that got a bit steamy against the rules of Easterbrook's contract. A McFlurry of text messages and emails emerged that went against what he had initially denied, meaning that the severance package was initially approved. The court settlement is one of the largest clawbacks in corporate America ever. McDonald's stated that he would have had to forfeit his package if he had been truthful at the time. Easterbrook had worked for the company for 22 years, starting from humble beginnings as a branch manager for a London location. The company, which has 39,000 locations in 100 countries, said that with this settlement, company employees, management and the board can continue to focus their attention on the growth and the business and building community, both inside and outside the system. Drivel. Did you hear that McDonald's gave all of their employees new large laptops for Christmas? They were Big Macs. Moving on very swiftly after that, let's talk about all of the new companies that are floated on the market. It's been quite an interesting week. Ooh, IPOs of the week. I wouldn't be doing that in public. As I reported 2 weeks ago, the LadBible owners went public this week, having a successful flotation on London's Junior AIM marketplace. The group, formerly trading as LBG Media, owns various brands, including Unilad, and their initial public offering popped them over £360 million valuation on Wednesday. The founders of the company, CEO Alexander Solomou and COO Adrian Kalantari, were among the group of shareholders who sold £81 million worth of shares in LBG Media, LadBible's parent company. Solomou sold a stake worth just over £50 million, and Kalantari made around $3.2 million from share sales. Both men sold about a quarter of their stakes in the business, which they set up while at university in 2012. Nice work, lads. Nice work. Reddit, everyone's favourite social media platform, has formally announced its intentions to go public. The popular cat photo sharing site and the home of the ever-popular WallstreetBets thread is looking to make the move onto the exchange in a hotly anticipated move. The company, which was initially bought by Condé Nast for just $10 million back in 2006, has since been spun off to run on its own as a company. It's now seeking to float with a valuation of around $10 billion. Ex-company founder Steve Huffman has taken back the helm to prepare the company ready for its listing. No more details on exact dates yet, or how many shares will be available, or even which market they'll be listed on. Just the S1 filing for now. Let's hope that the popular platform doesn't lose its unique charm as they seek to gain lucrative advertising revenue. And speaking of Reddit, and to wrap things up for the year, a festive dollop of your favourite section coming up now. Welcome to the best of the bets. In this first post, readers are reminded that buying the dip is never a good strategy, as you never really know when the bottom is actually going to be found. This pretty much sums up retail trading right here. This next video is a little gem that a Reddit user has dug up from the trenches of the financial crisis of 2008. Watch this absolute howler from Jim Cramer as he answers a question from a viewer about the now infamous Bear Stearns.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no.
Ouch. Remember, always inverse Jim Cramer. Buy what he sells and sell what he buys. Seems a solid ape strategy to me. Next up, the WallstreetBets community is already fully self-aware, prepared for the onslaught of advertising, the new media, once the company tries to fully monetize the platform. And just before the market opens in the US as I record this video, here's the final meme before the festive season for you. Good old Jay Powell praying for green today. Let's see how we end the week, but I don't think it's looking too good. Anyway, that's all for this week. I hope you've enjoyed it. Thanks for watching as always. Drop me a like if you have, subscribe for many more as we head into 2022, and I'll see you in the next one. And rather than me say it, I'll leave you with one last festive message before we sign out of the news as a reward for staying until the end.
Merry Christmas, you filthy animal.